What's good everyone, welcome back to another video on the YouTube channel, and this video is going to cover how you guys can properly align timeframes for better entries in your trading. So before we get into the video, I do want to say a huge thank you for all the love that you guys have been showing me and the support. So because of this, as I promised for hitting 10k subscribers, that I will do a giveaway. So I'll be giving back some challenge accounts for you guys to trade, and hopefully I can see some of you guys funded. I have arranged something to be able to give away 3 25k accounts, or it might be 3 50k accounts. So that was just an update on the giveaway. And another thing, if you guys have any video recommendations, make sure to leave a comment down below. I am working through them. I did have a lot of recommendations on my previous video, so I have been planning on making some of those videos. And if you guys want any topics that you're struggling with or you need help with, I can definitely make a video on them too, so just leave a comment down below. Other than that, let's get into the video. Okay, so the alignment of timeframes. This is very important because it gives you the framework to work off. So regardless if you are a scalper, day trader, or a swing trader, I will give you guys 3 approaches that you can use in your trading. So this is a shout out to the MMXM trader because he did introduce me to these timeframe alignments, and I will show you guys how you can perfect your entries by utilizing this time frame alignment. However, firstly, you need to know what type of trader you are. So this all comes down to the trader's personality trait. So we will label this as P. So the personality trait for a scalper, this is important because you want to be in and out of the market. So if you want to be in and out of the market, what do you need to focus on? You need to focus on liquidity pools on the M15. So this is what will be the most important chart to you. Then after the M15, you will focus on the M5. So on the M15, you will look for liquidity. This is the most important thing. Once you identify that, you will move on to the M5. On the M5 chart, this is where you will refine everything that you have seen. So if you see some sort of structure like this, and you see equal highs, once price takes that out, you want to see it refined on the M5, that price is changing its state of delivery. And then after the M5, you will move on to the M1. And what do you do on the M1? This is where you will look for your entries. So that is E. So everything will always come back to the trader's personality trait. So whatever personality trait you have, this is what you'll follow because this is what gives you the edge in the market. So the number one way to find your edge in the market is knowing what kind of trader you are. So if you've not watched my bootcamp already, it's my free course on my YouTube channel. I would 100% recommend you do so because it's better than 95% of the paid courses out there. Okay, so M15, you will look for your liquidity. Then M5, this is where you'll refine it. And M1, you will look to enter. And as you can see, M15, we have this fractal. We have liquidity being built up. And we take out the buy side liquidity. M5, we start to refine where the delivery state is changing. And on the M1, we will look for an entry inside a fair value gap. So this is how you should be aligning timeframes if you're a scalper. Let's go over how you should be aligning timeframes if you're a day trader. Okay, so for a day trader, everything starts off with the personality trait. So your personality trait is a day trader. So what do you look at mainly if you're a day trader? You will look at the daily chart. This is where you will look for your liquidity pools and everything else. So this is where the liquidity comes in. And once you have seen your liquidity pool, we move on to the 1 hour chart. What do we do on the 1 hour chart? This is where we refine everything that we saw on the daily. So we refine the liquidity pools and we look for an area where price is going to change the state of delivery. And after the 1 hour chart, we will look for entries on the M5. So you can see we have this fractal where price is making liquidity below the market and we have liquidity above the market. On the daily chart, we take out this low. So we take out the sell side liquidity, which was resting below these lows. Once we take that out, we are looking to target the buy side liquidity above these 2 highs. And after the daily, we will move on to the 1 hour chart and we will look for price changing its state of delivery. Once we have that, we will look for a retracement on the M5. This is where we will enter and we will look to target the liquidity, which was on the daily. So we will go over some examples towards the end of the video, but this is just a rough overview for you guys to get familiar with how you should be aligning timeframes, and whichever personality trait you are, this is how you should be looking at the markets. So this was a day trader's approach. Let's look at how a swing trader will view the market. Okay, so this is how a swing trader will align his timeframes. So first of all, it's always with the personality trait, which is the swing trader. And after that, we will look at the weekly and monthly chart. So these go hand in hand. You will just look at both of them because this is your areas of liquidity. So we'll mark off liquidity right here. So after every YouTube video, as I am making these flowcharts, I'm going to make them into much better graphics for you guys to understand, and I will upload them on my Twitter page for completely free. So if you guys want to have it saved, you can do, and it will look much cleaner. But this is where we are just going over a rough overview and giving you guys a understanding of how you can understand time frame alignment and how it fits your personality as a trader. And then I will upload these flowcharts in much better graphic form and easier to understand, and you guys can save it and refer back to this video and it will make much more sense as well. Okay, so you look at the weekly and monthly when you're a swing trader. This is where you'll look for your liquidity pools, and after the monthly and weekly you will look at the 4-hour chart. So for me, I don't think you need to dip any lower than the 4-hour chart. You can look at the 1 hour, but I think anything below that is too much, because you want to hold a position for weeks and months on end. So the weekly and monthly, that's enough, and the 4-hour and 1 hour is just a refinement and looking for an entry. So let's look at a short diagram example. So the market is in a downtrend and we have this fair value gap on the monthly. As we have this fair value gap, we have liquidity above these highs. So we want to see price trade into here so we can sell and continue with the trend. So we will look for price to trade up higher. Once we trade up higher on the weekly chart or monthly chart, we come into a higher time frame level. And what do we do here? As we have taken liquidity and traded into a imbalance on the higher time frame, we will look for a change in the state of delivery. Once we get this, we will look for an entry on the 4-hour chart. Once we have entered, this is where we will hold our position and ride the trend to the downside. So when you are swing trading, it's much better to play continuations, so such as following the order flow rather than trying to catch a reversal. So you can see this is where price reversed. It only reversed to take liquidity and trade into an imbalance, then continue its run lower. So it's much better to just trade with the order flow. And also going forward, I did have a lot of comments about people saying I should be using a crosshair because it's easier for them to follow what I am looking at and what I am drawing. So this is the crosshair that I'll be using in my YouTube videos going forward. And now we've gone over an overview of how you guys can be aligning your time frames based on your personality trait as a trader. And now let's look at some charts and some examples. Okay, so if we look at the M15 chart on NQ, you guys can see that we have a liquidity pool above here. So this is what we can look to target. So once we take out this liquidity, we will move on to the M5 and we will look for a change in the state of delivery for price to trade into. Then M1, we will look to refine our entries to trade into this buy side imbalance, sell side inefficiency, and we have sell side liquidity below this low. So all we do now is wait for liquidity to be taken, and you can see we take out the buy side liquidity. So this is a scalper's approach. So after the 15-minute chart, we will move on to the M5. Okay, on the M5 chart, you guys can see that we take out the buy side liquidity and then we have a change in the state of delivery. If you guys don't know what a change in the state of delivery is, it's when price changes from a buy program, which it was right here, into a sell program. So as we close below these up close candles, it's showing to me that the market is changing its state of delivery, and we can look for selling opportunities into the sell side liquidity pool below these lows and the lows that we looked at on the M15 chart. So after the 5-minute, we will move on to the 1-minute and we will look for some entries. So this red line right here, this represents the change in the state of delivery. So price is changing from a buy program into a sell program. So for us to sell this market, we need to trade into a premium. So right now it's in a discount. So we will look for price to come back into this fair value gap for us to look for selling opportunities into these lows. Okay, so as you can see right here, price is traded into this M1 fair value gap. Once we trade into that gap, we also trade into a premium. So this is good to look for selling opportunities. All we do now is wait for price to give us an entry. So you can see that price has a strong reaction from this fair value gap, and this is where you can market sell where the stop loss above this candle's high, and you can target this low. Because this whole move to the upside, this is actually a wick on the higher time frame. So I'll show you guys that towards the end of this example. However, this is where we market sell and we will just wait for price to do its thing. So you can see that was another entry that we could have taken inside of this fair value gap, but we decided to sell as we close aggressively with this down close candle, and you can see that we trade into the sell side liquidity pool. So this was a scalper's approach. I'm going to quickly show you the 15-minute chart on this example. So you guys can see this huge move to the upside. This was actually a wick and we had a strong reaction away. So this indicated that we were bearish and we can look for selling opportunities as we did from that M1 fair value gap as we traded into a premium. So now let's look at a day trader's approach. Okay, so this is a day trader's approach. As you guys can see that we trade into a discount fair value gap right here. As we trade into this discount fair value gap, we have buy side liquidity resting above these highs. So already we have a bullish bias on the daily chart and we will be looking for buying opportunities. So after the daily chart, you'll move on to the 1 hour. And on the 1 hour chart, this is where you'll refine what you're looking at. So you can see that this is a clear market maker buy model. We have the original consolidation that's resting right here. And all we do right now is see that price is closed above these down close candles. So that's showing that it's changing its state of delivery and we've closed above this up close candle right here. So we can look for buying opportunities as soon as we come into this fair value gap to the upside. After the 1 hour chart, you'll move on to the 5 minute. So on the 5 minute chart, you guys can see that this is the smart money reversal and we have a fractal market maker buy model. We have buy side liquidity resting above this high. So when I am day trading, I'm always looking to trade inside of New York or London session. You can see right here, 4:30, this is where the market closes, so we don't want to do anything. All we do is wait for the 9:30 open in the next day. And over here we can let price action do its thing until we get to 9:30 and we will look for buying opportunities for price to trade higher. Okay, so as you guys can see, this is 9:30 and we dip into this fair value gap and you can see the bodies are closing at 50% of this gap. So this is a strong indication that the market does want to go higher. So when I see this, this is where I'll market buy and my stop loss will go below this low. This is our intermediate term low. And then we will target the fractal market maker buy model, which is right here. And if you want to, you can target the daily highs as well. So this is where we will enter and we will let price action do its thing. So as you can see, we are just consolidating and then we have an expansion to the upside. So this is how you should be aligning timeframes and looking at the market if you are a day trader. And lastly, let's look at a swing trader's approach. Okay, so this is how a swing trader will be viewing the market. You guys can see that this is bullish order flow. Every time price trades lower, it's going to go higher. And you can see right here, we left equal highs. So this is a perfect area to buy because we left equal highs and we dipped into a discount and had the strong reaction away. So on the weekly chart, this is showing us that we have a bullish narrative. Once you see this as a swing trader, all you need to do is dip onto the 4 hour chart and look for a simple entry. This can be a fair value gap, and this is where you'll position in until it meets the draw on the weekly chart. So let's move on to the 4 hour chart. Okay, so once on the 4 hour chart, you guys can see that this is a clear market maker buy model, and we have this fair value gap right here. All you need to do when you are swing trading is you need to just set buy and sell limits at levels that you think the market will go into, and then you just let it play out. You can have a bigger stop loss than this if you want to. You can have it below this low. However, this is an immediate term low, so this should be protected, and then we should target these highs as this is a market maker buy model. And all you need to do is just place your buy limit and let price do the rest. So you can see we get tagged in and we have an expansion to the upside. So you can pyramid here. If price comes back into this level, this is where you can add another position with lower risk and your stop loss can go below here and you can have the same target. So if you risk 1% here, you will risk 0.25% right here if price tags you in and you'll have the same target. And let's see how this plays out. Okay, you can see that we take out the buy side liquidity on the weekly chart. So this is how a swing trader should be aligning his timeframes. And I will be uploading all of this as a flowchart on my Twitter page and we'll be running a giveaway next week. So make sure you guys check out the description down below for any more information. And if you have any more video recommendations, leave that in the comments down below as well. And I hope you guys found this video useful. As always, thanks for watching.